What's going on, guys? Welcome back to the Rollup TV. Today is Monday, June 23rd. We have 5 excellent conversations coming to you today. One debate, the first debate on the Rollup TV. To start, we have Avi from 𝘗𝘓𝘦. He's been getting quite a bit of backlash about his investor email posting, what they're doing at 𝘗𝘓𝘦, and his advisor board as well, which we're going to talk to him about. We've got 𝘗𝘯𝘷𝘦𝘴 to talk to us about macro. Today, it looks like Iran has shot back at the U.S. at some bases in Qatar. We have Brian, the co-founder of 𝘗𝘯𝘓, talking about investing, staking, etc. And we have Nick and Douglas to discuss collabs and how the infrastructure stack will play a role in that future. And then we have Sean to talk about the agentic future. So a lot of good conversations coming today. Excited for the stream. And of course, we have our first segment today, which is by the numbers. And I wanted to show my tweet today, actually, that I posted this morning, which is that Circle is on an absolute tear of a run. I mean, this thing is now trading at the time of the screenshot was 261, 269 now, hit a high of 298 today. Up, I mean, 4 or 5 times since it launched at about $60 on the IPO. Traded to like 95 that day, and I think people are pretty shocked by the performance of Circle. Its market cap now has outpaced the total supply of USDC as well, which is also crazy. And just overall, really a exciting time for people that want to get exposure to stablecoins. And I think that's what's happening here is Wall Street is really jumping to try to get exposure to these assets. So I wanted to cover this today and by the numbers because I just felt like, I mean, this is one of the most insane charts that we've seen. And it does seem like there's a new trend now where if you're buying IPO of crypto companies, you'll start to perform well. And there's also these Bitcoin treasury companies that have been doing really well. So on today's buy numbers, I would say that this Circle chart is probably closer to a blow-off area than a buy point. I just don't know how much higher this thing can go in the immediate term, but we'll kind of see how that plays out. What's exciting about this is for the other stablecoin companies, things like Cap Money, things like Plasma, Stable, even Maple, who we had on last week. I think they are going to be beneficiaries of Circle having this amazing run and Wall Street being that interested in stablecoins. Ironically, today, 𝘗𝘓𝘓𝗦𝘴 also rang the bell to start off the NASDAQ and start the trading day. There wasn't that much news on the back half of that quite yet, other than the DApp ETF that they have announced. So, guys, just to close off this loop, when I'm looking at Circle here, I think that this level of speculation has to come down into the crypto markets as a whole, and will likely happen as a result of some of the war stuff. So the war stuff has been just a ongoing development, and I think it's really just these companies are now, well, first of all, these countries are now kind of fighting a war with each other, US and Iran. I just think it's going to be an excuse to print. I think that it's going to be something that we're going to have to deal with for a while. It feels like we've been at war in the Middle East for a long time. So, look, I mean, nobody wants to see it. Nobody wants to be a part of it. But that's just kind of the state of things as they are. And so I think that we have to live with that and kind of go forward with it as it is. Coming up, guys, we have Avi Patel, who's going to start us off today. Avi is the founder of 𝘗𝘓𝘦𝘴. He's been under backlash quite a bit. So I'd like to get to know the guy a bit, understand why he's getting a lot of heat and what he's done. There was some drama over the weekend about his advisory board. So I'd like to get his answer on that and the VC email and understand a bit of his distribution strategy with some of the guys like 𝘗𝘓𝘴, who are doing a similar kind of strategy, if you will, in terms of marketing. So we'll get him up here in a short second. Main kind of topics at play are going to be his AI technology. Again, what we just covered with regards to some of the drama, token holder value, his kind of differentiations with regards to ICM and more. So Without further ado, we will get him up briefly and get ready to get started. Welcome back to the Rollup TV again. Should be a great segment today. And I think the worst is behind us on this war stuff. I think we're in a good spot. Unfortunately, the world's a little bit shaky. I think the markets had quite a dump over the weekend and should be coming back to a good spot shortly. So, guys, we'll give it a couple seconds and we'll get Avi in here immediately. Looking forward to having him on and to jamming on what's going on today. We'll just take a quick pause here and we'll get into it. So we had the dupe guys on last week, Bobby, who is in the same kind of niche of these Believe coins. I actually met another founder over the weekend who is building something similar. And these guys are all, they all are different than the traditional, I would say, crypto founders. Like, it's a different type of thinking. It's a different way of approaching the space. Also, it's very it's very token oriented as well, which I think is different. A lot of people try to focus on the technology, on the infrastructure, et cetera. But this is very, very token oriented in terms of the product. And also a lot of these are centered around AI tools. So it's about like monetizing AI tools. And, you know, ironically, even though it's far different and far smaller than something like what Yano and Blockworks are doing, we had a pod where he explained how, you know, on-chain IPOs would be something that they could pursue. And I think this is kind of what we're seeing with these guys, is that this is like this idea of, okay, you can actually just launch different products on chain using a token and make the token improve the product that already has pre-existing demand and product market fit. So that's kind of how I'm thinking about 𝘗𝘓. But I think that the audience is going to want to hear about the latest from Avi's side about what, you know, has been unfolding. So I'm not going to let up on him. I'm going to ask him what I think people would want to understand and hope to get to the bottom of this a bit. So we'll get him up here in a sec. Let's have a good stream, guys. And we're pulling them up now. Let's get after it. Here we go. Give us just a sec. But I have to react to some tweets here. Man, I'm waiting for Robbie. He's coming back today. He's flying to the city. We had a huge week ahead at Permissionless. And I'm excited to kind of see what's going on here with Avi. We are doing Rollup TV live at Permissionless Wednesday and Thursday. So excited for that. We'll be on the ground there doing a ton of interviews with builders, founders, etc. And yeah, we got Avi in the back end, getting him set up now. And then we have a happy hour on Thursday that we're hosting and a dinner on Wednesday. So excited for that. Excited for this week. Should be a busy week for us. But looking forward to kind of what comes of it and how we can hang. So, all right, we're going to get him up here, get him in the back end, and we'll be good to go. Avi, all right, let's get him up. Welcome to the show, man.
What's up, dude? How's it going?
Good morning. I mean, the world's crashing, but I mean, we're still here. We're still building.
The world is definitely crashing, dude. I haven't like kept up with it too much, but I just see everything red every day, all day long, basically. Is what it is.
Yeah, man. Well, you got yourself into some shit this weekend. didn't
Oh
you?
my God, man.
So what
I
happened?
never
So,
knew.
Okay, yeah. So you post the advisory board, with some
Yes.
people that are advising, and crypto Twitter just absolutely lashes out at you. What
Which
happened?
didn't,
Yeah.
I mean, it didn't make too much sense to me. I mean, look, I've shifted basically like my complete focus to just ship as fast as physically possible, which we've been doing this whole time, but focus really hard on those updates because you can't ever hate on shipping. And that's very clear. Like we've gotten no FUD last 3 days basically, but man, dude, that advisory board, I will say, and I will defend this to my core, are just killers. Like they're amazing. It's people who've built like multi-$100 million companies. Like I think the biggest ones that got hate were 𝘗𝘓𝘓𝗦𝗡𝗏, who's literally was 𝘗𝘳𝘃𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 what the issue was, because I can't say it's his current manager. He's dead, which sucks, obviously. It's his estate manager at this point, right? And then Molly O'Shea, who's a gem, by the way. She's interviewed every big startup founder, and she runs one of the biggest VC podcasts. She's like one of the biggest VCs in tech, right? Those are the two that got the biggest hate. And then it just spiraled. It was like a combination of Agent Chud. Somehow Kobe got involved. I don't know what that was. Thankfully, Kobe put out like a public apology after saying he shouldn't have like gotten involved here. Like, this was stupid. So I do appreciate that he did that. But for a good couple of hours, dude, I had to deal with a lot of messages from some angry advisors who were receiving just like death threats, like mass FUD, like mass information, to the point where like two of them ended up pulling out, which is unacceptable, honestly, from, you know, the community's end. But it's just something I got to deal with, I guess. Yeah.
So none of these were like falsified, or all the claims from Twitter people.
I literally sent every contract to like Imran from Alliance, for example, like, who then sent these contracts out to like Kobe. And that's probably why he put out the public apology. But the
so you had to send contracts to people to prove that they were confirmed, and that's how you got people to basically quiet them.
So just to clarify, the contracts were with 𝘬𝘪𝘵. So 𝘬𝘪𝘵 is the company that owns Kled. It's always been under Kled. All the advisors except for two were fully aware of the new like Kled vertical, and frankly, I could have handled it better. Like, I could have told like it was two, like I won't name them, obviously, that the two that pulled out, that I could have handled better and like told them very clearly. One of them reacted to our tweet about Kled and like very positively as well, and that's when everything was going great. But obviously, when things go down, like, you don't want to be reputationally tied to something that's going to have like mass FUD, right? So it makes sense. But the rest of them, like, they all knew about it. The contracts were there too. So it sucks, dude. I can't do anything about it. We're down to advisors, but I mean, hey, like, I've learned my lesson. I'm just literally never going to talk about advisors ever again. The last thing I want is to ruin relationships with people that I'm friends with in real life, you know?
Okay. So the other thing was the VC email. That was real.
Oh my God.
Or was that fake?
Yeah. No, that was real. So we had our investor put out a public statement who's seen the email and the term sheet. My whole point of posting that in the first place was the fact that
was a bit much.
It was very clearly AI generated. Like, the whole email was like the VC quite literally probably typed in ChatGPT, like, make up some excuse on why we didn't invest and write me an email and send it. And I thought it was just so unacceptable, because for context, I talked to this VC for 8 months of a cycle to close them on our seed round. This VC gave us a term sheet for a seed round and then pulled out on that term sheet, which is like the worst bad practice in VC possible, and then didn't talk to me for months. And then when Kled started doing very well and we started getting a ton of signups and traffic and all of that, they come back to us with like a Series A term sheet, because they knew we were at that stage now. And it was just out of the blue. And I was like, dude, I'm going to put these guys on blast. I'm also not going to like publicly defame them. So I'm not going to like reveal who it is. That'd be the stupidest thing I could do, especially messing with like a $1 billion fund. That's dumb. But it was another like just like thing that caught fire. There's definitely some good that came out of it. Like, it got a lot of attention from the Silicon Valley space. And like a lot of big partners like Cyan Bannister from Long Journey followed me off of that. A16Z, a lot of their partners followed me off of that. General Catalyst, a couple others. But, you know, and we also got a ton of signups that day. So I can't complain, but not something I expected to get so much backlash with like falsified claims and immediate like assumptions of it being like fake. I'm glad like Dan's tweet, who's like one of our investors, has like 1,000 likes now and got all the attention it needed to dispel all of that. But man, it was a ride for sure.
Yeah, I saw that tweet as well. All right, well, let's talk ค์then. So you decided to kind of participate in this internet capital markets realm, if you will, but mostly from like a non-crypto background, right? Like you kind of are tackling this problem from like an AI background, and then kind of using some the ค์token and just crypto rails in general to amplify or to improve on the current on the product. So just curious, like why you made this choice, like what was the thought process from like, okay, I have this AI tool, I want to participate in this kind of ICM idea, and here's like what I expect to get out of it, and like why I think it's a good idea.
Yeah. First, I'll comment on just like the 𝘠𝘬𝘐 ecosystem. Like the reason that we're even there is because it's just the most destigmatized way to launch a token and not get complete pushback from the venture capital space, which is really, really important, because for token holders, at least, which I mean, I say this publicly, it's my #1 goal to make sure token holder value, the fact that I've launched myself in this space means that I have to make sure token holder value always goes up. But that means building the biggest and best company. And that comes with also raising capital from outside funding and maintaining a good relationship with partners. And 𝘠𝘬𝘐 is just like, frankly, the best way to do that. So there is that. And then 2, I built marketplaces in the past, obviously, like Nitroity has been up. It took me 3 years to solve the cold start problem on that company. And yes, it's the music space, so it's much harder. I literally had to DM every artist on planet Earth, every record label, sign contract with them. It is difficult as fuck. But the reality is like every marketplace has this cold start problem. And cold start is like one of the hardest things to solve or fix in any capacity. And the fact that launching a token means that you can evangelize this community of people to then help you solve that cold start problem, get your first 1,000 users. I commented on one of Imran's posts recently, but going from 0 to 1 is much easier in the CT space than any other space out there, because you're promoting the fact that you're going to launch a product and then hopefully increase this value for token holders, right? That's the whole point. I also did say going from 1 to 0, which usually is never possible at the early stages, is very likely in CT because of mass FUD and whatever. But the best founders will, solve the taste of time there, but that's why we launched, and it worked. We proved it out. We hit several thousands of users in 3 weeks. We got 11 million impressions. Now I think we're almost at 12, and we're getting signups and site visitors every day. And it solved the fact that like now I mean, we already had the pre-existing relationships with labs and small labs that we could sell to. But the user consumer data that we now have is worth a lot, and big AI companies are paying attention to it. Like we had our second meeting with OpenAI 3 days ago, third with Google DeepMind 3 days ago. And I think over time, the more users come on the platform, the easier it is for us to convince these big companies to give us billion-dollar contracts and bankroll us for life. Yeah.
What is the nature of those meetings then? Like, what do you guys, like, what are they interested in using ค์for?
It's really the relationship building and the fact that like, if we can navigate look, these companies are not going to jump the gun until I said it publicly, like they need to see a couple of things. It's one, and this is my prediction, but I genuinely think it's accurate. I think it's, if we hit 100,000 users and then all of those people are uploading the camera rolls and stuff, there's no world where OpenAI ever says no to a $1 billion contract. And the reason the reason's pretty simple, right? Like OpenAI has right now 2 options. One, either they scrape the data, or 2, they go and get the enterprise data. There's problems with both those options. One, scraping data takes it's pretty long, and 2, it's not legally compliant. Like you're getting $1 billion lawsuits thrown around left and right by every company on planet Earth, right? So scraping data is almost completely out. It's not relevant. It's not good. Every single state in the US, as well as like the EU, are launching things that are gonna prevent this in the future, right? And even right now. And then 2, getting the data from enterprises, that shit sucks, man. Like I've had to do it. Like going to PBS and Apple's Film Festival and 50 other companies to get a bunch of data means you have to convince and suck the dicks of 100 different people to try to get them to partner with you, right? So enterprise sales is not fun. And it's also not tailored, right? So like if you want writing data from the New York Times, for example, writing data on, let's say, the educational system, and you get data from the New York Times. New York Times doesn't have only articles on the educational system. They have some, right? And the rest is all a bunch of random nonsense, basically, right? So in the context of user uploaded data, it solves both those problems. One, you're legally compliant because that's the nature of the platform. You're getting the data licensed, and that means you're compliant on all fronts. And that's our number one goal. It's safe, secure, compliant, right? And two, once you actually get the data and have it in-house, you have a tailored data set. Like if OpenAI ever wants some specific data set on just like educational data or homework, right? Like we curate that for them from the mass uploaded data set from our users. So it's an engine for these people. And it's a very clear idea to them that like, hey, if this company has somehow convinced hundreds of thousands of users, millions of users, that uploading data here is safe and secure and has proved out that it's safe and secure, we can then put out hits on data. We can say like, hey, 𝘬𝘳𝘚, we need 40 hours of POV data. We need 40 hours of dash cam footage. Go source it for us. And then on our marketplace, which I announced as well, like we're going to make this data terminal where you can fulfill these hits for an increased payout. Users can go and fulfill that. Users can go and do that for them, right? So that's what it's all about. The nature of these conversations, hey, like build the relationship so they know they're very aware of us right now, right? But make sure that you actually prove it out and prove out that you have this big ass community of people that are willing to help out these big AI companies and get paid for it, right? That's the whole point. So it's all about going viral game, all about getting more users. That's all this is all about.
Yeah, man. I mean, it feels like this whole distribution focused era of I'm 25, man. So I'm like on the cusp of this Zoomer generation between like that Roy Lee guy from 𝘗𝘓𝘬 and some of these other like SF kind of oriented people. It just seems like this like distribution first mentality is just like, I mean, it's a whole different world compared to like pre social media kind of founder thought processes.
It's a balancing act for sure. I think I think building good products should always be the number one focus. Always,
course,
like it should never stray away from that. I think me and Roy share that same ideology there, but it also does depend on the company. Like you don't want the eyeballs sometimes for some companies, but for these consumer companies, it is really important. It is really important to get those eyeballs. I think for 𝘬𝘓, it is the most important though, compared to even something like 𝘗𝘓𝘬, right? Like 𝘗𝘓𝘬 doesn't have the necessity to go viral every day beyond just getting more users. For us, getting more users is literally the win condition. Like it is the actual reason why we get $1 billion contract from OpenAI. So when I post user updates all day long, that's the highest signal for like things going good. Like if we get more users every day and more people are signing up and there's more site visitors and more traffic, that is actually the highest signal for the company ended up doing well, beyond the fact that we're shipping every day. So that I think is really important. I think it's very valuable. Yeah.
Yeah. I mean, I think in this new era, you have to have like either your CMO or somebody on the team, usually CEO is even better, has to be pushing the agenda, or else it's just like nobody, because, in this age, like think about 25 years ago, right? We were both not born, but people were, they would read the Atlantic newspaper or blog, or they would, pay attention to like New York Post or New York Times. That has flipped so much towards like now you just follow creators and individuals over brands. And so I think like people know you and then they know 𝘬𝘓𝘓, and then that's a kind of like this like indistinguishable relationship. Whereas I feel like without that, it's really hard to kind of go from like 0 to 1, as you say.
It was same for 𝘗𝘓𝘓𝘓𝘗𝘓𝘓, like when we were starting out. Like it was, I didn't do it on Twitter, obviously, but I did it on Instagram all day long. I would just post stories about my life, and it was just me doing things in real life. And frankly, they did very well. And people just knew 𝘗𝘓𝘓𝘓𝘓 because they knew, hey, that's what Avi was building, and still is, right? So like that's the whole point. I 100%
Who are some of the other founders that you're friends with or that you've seen that also do an incredible job at like being the founder-led marketing, and kind of what have you taken away from some of these others?
I mean, I'll just talk on Eric Zhu, because that's my boy. Eric owns Sperm Racing, if people aren't aware of it. He ran Aviato before that as well. And Aviato is a great enterprise company. It's doing awesome. But across the board, like these personal brands is frankly how you secure clients and everything. Like Eric literally ran an enterprise company and was posting dumb shit on Twitter all day long and stupid shit on Instagram. And I mean, dude, he was like locking in VC after VC using their data terminal, right? So people bet on people, and that's just the sentiment publicly. And anyone that isn't aware of that is not living in reality. Putting your best foot forward out in the public eye and showing off that you're a real builder is a really big priority. I frankly don't know many other founders that run it like Eric. I think the Superpower team does great. Max and Jacob, they definitely don't have like a personal brand compared. I mean, Max does it actually. Max Marchione from Superpower has like a very good personal presence, especially on LinkedIn. And it's how he acquired his entire whitelist or his beta list for Superpower, right? So there's some great founders out there. I think we're going to see even more coming up in the future, and hopefully like people like me, Eric, and Roy and Max can lead the charge and show it off that like, hey, this model works, and it's important that you put yourself out there. And I mean, with AI content getting better and better, like personal branding is just also going to be more and more important over time.
It is.
Yeah.
And I think entertainment too, more than like information, because information is kind of abundant now. I mean, look, obviously having valuable educational resources, but people want to have fun. They want to like enjoy short form stuff as well. So, Avi, man, I appreciate you spending some time here. Keep fighting the FUD, all right? It's gonna keep coming.
It's gonna keep coming. I think build good product equals thing going up for everyone. So I'm just gonna make sure I keep doing that. That's all I care about. You too, man. I saw Sean Lee's coming on at the end of this as well, right? He's one of our investors. Yeah, he's one of our investors. He's a very close friend. I didn't even notice. Him and Magic are doing great things. So you're gonna have fun talking to him for sure. Yeah. Awesome. Talk soon, man. Peace.
He will be joining us to discuss the state of the macro world. There is a lot going on there. So today, just with the Iran things, and then in general, with what he's seeing in that regard. So before we get to that, we have some news today around some of the more prominent some of the more prominent stablecoin news, which is part of the stablecoin super cycle. So we're going to pull that up in the short term here, and then get Will up on the screen. So the news today is that Fiserv has started a FIUSD stablecoin. This is a stablecoin following the Genius Act. It is a new stablecoin tailored for institutions. It's going to utilize infrastructure from Paxos and Circle. So shout out to both of those teams who have been preparing for moments like this. It's supposed to be interoperable with other leading stablecoins, and of course launching on Solana, which does seem like the B2B launches are happening this cycle. It's currently going to be available to their own banking clients, which has a lot of large institutions in the States. And they're trying to streamline stablecoin access across payments, settlements, and treasury functions. So excited to see how that kind of plays out. From DGen News here, they'll probably launch this, I would say, in the given, I don't know, maybe in like a week to 4 weeks. I just feel like a lot of these companies are moving really, really fast. And that is what Fiserv and the stablecoin teams want to do. I mean, look, if I'm sitting in their shoes, I'm thinking to myself, how do I capture as much value as possible from this trend? Obviously, a lot of investors and people in the space have seen Circle and seen Circle's success as of recent. And so now people are wondering to themselves, okay, how do I kind of capture that? Guys, I just think that this trend continues for a while. I don't see the stablecoin kind of cycles slowing down, and I really expect overall for this to kind of keep on scaling up faster and faster. That conversation with Avi was pretty interesting. I think a lot of people may not agree or believe him with regards to the actual growth of Cled in terms of like the acquisitions with the or accusations with the advisory stuff. But yeah, I think that crypto Twitter can really lash out at people, especially if you're doing things differently and making a lot of noise, which I think of those other people focused on distribution are doing a good job of. But sometimes I think it can be a bit fun when you have big bang announcements. So, um, looking for getting Will up here. He should be up here any minute now. And yeah, we have another segment today. I think we're going to focus on the macro side of things today. I'm curious. I'm curious kind of what's going to happen here in the next couple of weeks. I think Will has been posting a lot about macro, has been working deeply with some of the investment firm stuff. So excited to kind of take his word for it, learn about what he's seeing, and understand the state of that side of the world. Been following Will's content for a while. I feel like he was pretty deep into the Bitcoin space prior to kind of doing more on the like investment advising stuff with 𝘗𝘳𝘓. But we'll see kind of his take there on the macro, on the rates, on Bitcoin, and more. And yeah, looking forward to having the next guest on. BTC now trading at 1028. Hype with a big bounce to up to 36.7. That one looks pretty good still. Had quite a dip over the weekend across the board. Yeah, man, this war stuff is just really exhausting, and I think just problematic for a lot of people who are tired of seeing this stuff play out, not happy about the state of things. So yeah, we're gonna get Will up on here. I know he's coming to the city soon. Looking forward to having him. Again, a busy permissionless week this week, but we'll get him up and get him fired up about the macro, get his take on things, and see where we are. So without further ado, we'll bring Will up and we'll get started. Will's in the house.
Yo.
Good morning, man. Good
to
see
you.
you.
Good to see you too. Oh, there you are.
On the
black screen now. I can see it. There we go.
How we doing on the state of things? Huh? We had a little bit of retaliation this morning from Iran, huh?
Yeah, that's right, man. It's been an interesting couple days. I was just in the Mediterranean. It's good to get home yesterday. Actually, I landed back in the States, and then the U.S. had conducted the attack. I think like 15 minutes, or at least the news came out with that they had attacked like 15 minutes before I landed. So
it's rough.
Yeah.
So
a couple days.
You've been spending quite a bit of time then, and like just thinking about the macro side of things as well, with regards to kind of rates and just kind of seeing how things have been playing out. Now that things have escalated a bit, do you have any takes on kind of how that affects global liquidity, or just general thoughts on how this could play out from a more macro perspective?
Sure. Yeah. First of all, nice to meet you, Andy. Sucks we couldn't get on last time. We had like some issue with like servers or Google or something.
The whole internet.
Yeah, the whole internet decided to go down before I hopped on here. So nice to finally be on. Yeah, this is obviously something I've been thinking about as market participant alongside a lot of people. I'm not going to LARP that I'm a geopolitical expert, but definitely has been an interesting 2 weeks. I think if we kind of go back to earlier this year, we start, I guess, with Trump kind of getting into the office. There's this huge kind of narrative around Trump that he was going to cut government spending and help kind of the debt/deficit situation here in the United States. It's no secret we have very unsustainable deficits here in the U.S., and we continue to pile on more and more debt. And Trump kind of part of his messaging throughout his campaign and the beginning of first month and a half of when he got into office was that he was going to try to combat that spending. So my AirPods just like made that noise that they might die soon, so I might have to switch over to my
good
computer in a second. yeah, in February it became like incredibly bearish because they were talking about how they were going to cut spending. We had valuations near all-time highs. The market melted down, and I think just personally myself and underestimated just how quickly they kind of completely pivoted on all of the messaging that they had been putting out for the first month and a half, really, because the bond market threw a fit. And so we saw Trump basically do a complete 180. We still haven't seen any of these trade deals materialize, but we obviously walked back tariffs. We saw everything with Doge basically get effectively walked back.
Yeah.
Now we've got the big beautiful bill that we're waiting on to pass here at some point later this year, which is going to add probably another couple $100 billion to the deficit. So all that to say, basically Trump was probably the only person that could had the balls to maybe cut spending for real, and was forced to walk that back in a week and a half. And so in my opinion, like if Trump's not going to do it, it's going to be tough for any politician that wants to make a career out of being a politician to be incentivized to cut spending, because obviously the people want the money spigot to keep flowing. And so in my opinion, we basically flipped into like full-on Ponzi mode in the US.
Wow.
Now they've completely changed the messaging. Or Scott Bess at the beginning of this year was talking about we're going to get the 10-year down. And now they've completely flipped to we're going to grow our way out of it. So now it's we're no longer going to try to get the spending down. We're just going to juice growth, and that's going to close the gap between debt and GDP. I think we're at a very interesting time now, though, where we're starting to see some of the data come in soft. Like retail data last week.
Yeah.
A couple of these other data prints, which have been showing maybe like early signs of somewhat of a growth slowdown. Some other dynamics, obviously geopolitically, especially over the last couple of weeks with oil. With all the turmoil in the Middle East, and does that have is that just transitory? Does that have lasting impacts? These are questions that really come down to like questions about the conflict itself, and is it going to sustain? Which again, I'm not a geopolitical expert, so I don't have a great answer to. And then we also have looming on the horizon a new Fed chair that's going to be coming in next year, and obviously Trump's been incredibly leaning towards wanting rates to come down.
Yeah.
He's been obviously dunking
Screaming
on Powell. Yeah, screaming at Powell.
So is the Fannie Mae guy who's worried about the
100%.
real estate collapse. Yeah.
Right. So yeah, now it seems like there's very high probability that they're going to bring in like a 𝘮𝘮𝘮𝘮 next year that's gonna cut rates. And so I think the kind of back and forth is, will the cutting of rates reignite inflation versus kind of the downward pressure on rates across the board. I think this is a difficult question when I'm kind of figuring out, for context, I'm always long Bitcoin, have a core Bitcoin position. In my kind of like trading portfolio, I like to take, these kind of like larger liquid bets. In 2023, it was very long like Coinbase calls. Last year I was like publicly talked about how I was long like TeraWulf for this, AI HPC kind of transition. Beginning of this year, I was very long Alibaba. Kind of the trade I've been putting on over the last month or so has been shorting the long end of the yield curve, basically because of this complete 180 from the Fed, or from the Feds, not the Federal Reserve, but the federal government, from cutting spending to now completely walking that back and saying we're gonna juice everything.
Yep.
But now, the information has changed a little bit in terms of, we've started to see some softer, economic data come in.
Yep.
And, that should be bullish for bonds. While at the same time, from a longer term perspective, if the Fed's cutting rates, that should juice inflation, and that should make, longer duration debt less favorable to own for investors. So, this is kind of the back and forth in my mind, and considering kind of actively managing the position a bit, which I am slightly down on. But I think the highest conviction thing is that the yield curve probably will steepen. There's also some things like Feds are talking about, implementing, Besant's been talking a ton about this, the SLR exemption stuff.
Yep. Which is kind of like hidden QE in a way, right? It's like, it's not the same as QE, but it's kind of just like something that they can pull on that helps, global liquidity.
Yeah, basically it's like the leverage ratio that banks need to hold treasuries. And so, they've done this like during COVID. They adjusted this to try to stimulate demand for treasuries. And, it seems like they're trying to do that now. I think the problem is, just if I tell you that you don't need as much collateral to buy my toenails, that doesn't necessarily mean that you want to buy them. Yeah. So, I think for banks to want to buy longer duration treasuries, you need to see the yield curve get steeper because banks, borrow on the short end and lend long. And so I think, the SLR exemption stuff doesn't necessarily mean that there will be more demand, but, I think in the short term, you've got kind of a culmination of, the SLR exemption stuff seems to be getting, pushed forward, some softer data is coming out. So, and it seems like the big beautiful bill, which is obviously going to add a ton to the deficit, seems like it's getting slightly delayed in terms of when it's going to pass. And I think the culmination of these three things have put some downward pressure on yields in the short term. But this is something that I still have pretty high conviction on, on like an 8 to 12 month basis. But tactically, I'm thinking about managing the position a bit. I think very long term, right? Don't want to own debt. But yeah, these are some of the things that are, kind of, going back and forth on in my mind here in the short term.
So then hypothetically, if you were, Fed Chair Powell at this previous meeting, would you have lowered rates? Would you have cut rates, or would you have kept them the same as he did, and why?
Yeah, I think it's a tough question because, I think whether Powell's going to say this or not, right? He's got, this kind of whole thing with he doesn't want to let Trump, bitch him around.
Yeah, publicly, right? Like if Trump just kind of like backed off a bit, I bet he would have considered it, perhaps.
Yeah, exactly. So I think, it's a tough question to answer. But yeah, that's been my main focus. I've also been, tactically, trading in and out of some on-chain stuff. It's funny you just had Avi on because one of these trades was like buying 𝘗𝘓 at 5 mil, selling 25, 30 mil.
Yeah. What do you think about these ICM things? Like, are you bullish on this stuff? Like 𝘗𝘓, dupe, fitted. I mean, like your personal take, not financial advice.
The only, of course, I gotta say this because compliance is gonna get on me. Actually, I'm glad you just reminded me. Not financial advice, my personal opinions, not a reflection of my employer, etc. I've been paying attention somewhat to the stuff. The only one that's super interesting to me, and I don't want to like shill it a ton. And I've been like trading in and out of it. I might like talk about it, and I might be out of the position by this evening. But so disclosure there. But the one that is really interesting to me is 𝘗𝘓. Like I said, I bought it at like 5 mil, sold like 25, 30 mil because there's just like crazy run up in a short period of time. But over the last couple of days, obviously like there's been a ton of, in crypto we call FUD, but, criticism around the project.
Dude, and I just asked him about all of it, and he had answers for everything.
So. Yeah. Avi, I obviously don't know the guy personally, but, he seems like he's somewhat of a sharp guy, and, obviously seems to be like very excited about the whole project, and he's young, right? He's like 2 years younger than me. So, I think like there's been some like maybe PR, missteps here and there, but it doesn't seem like the guy is a total scammer. But, regardless, I think like pattern recognition of my brain like reminds me similar, feels similar to like AI16Z early on, where like there was a period of like very heavy FUD after like kind of the initial run up. All these coins usually do a 80% drawdown, 70-80% drawdown after the initial run up, and 𝘗𝘓 just kind of had its first one over the last 2 weeks. So full disclosure, like I did buy some back of what I sold in the $25-30 million range last night, and bought a little more this morning. But it's not a big position, right? It's a small token. But yeah, I've been somewhat paying attention to this stuff. I think it's very interesting because obviously you're going to see kind of the convergence of both TradFi and crypto, but I feel like this, ICM stuff is kind of the first real convergence, it seems like, of kind of the, SF VC crowd in crypto. So, in terms of like pools of capital to come in and bid these things that aren't crypto native. I think Circle is a great representation of, as we see, these crypto companies IPO,
Yep.
And have actual earnings that, Wall Street feels like they can value. That's an external pool of capital that can bid crypto assets that is outside of our, CT, small world. And it feels like, this ICM stuff, again, I'm not bullish on all of it. I don't own Launchcoin. But it feels like, this is kind of an area where you could potentially, I think low likelihood, of course, in the grand scheme of things, but could likely relative to other crypto assets bring in this kind of like external pool of capital, which is like this SF, like VC type of money. So it's something I find
and
really
they just have a
interesting.
different like perspective towards crypto, as like they approach crypto as like a component of their business, not as like the business per se. Like
Sure.
it's a different way of approaching building projects, I think, and protocols than what you would see from like crypto native founders.
Yeah, I agree. I think just the way that, the messaging, like for example, like, the way that 𝘗𝘓 has been, messaging things, but, a lot of these projects that I've been following less closely. Yeah, it definitely is slightly different approach. I think the, like AI data, narrative makes a ton of sense in terms of, everything that, scale as well, right? Avi was probably talking about this. I didn't listen to him before I came on, so I'm not going to repeat everything. But, there's like private, sector data that, these companies, these large, big tech companies need to tap into, but, you need kind of like a median to get the data. It's definitely something that I think is interesting. So,
Yeah. On the data front, I'm curious like how much you use on-chain data to inform your portfolio, your trading decisions, investing, and just kind of like what sources do you use? Kind of like where do you get the most signal from, whether it's different brands and companies or specific metrics? Like just curious kind of your thought process as to actually using on-chain data to make choices, where you get it, what kind of metrics, et cetera.
Sure. Yeah. I mean, I think a lot of people, going back like 2-3 years ago, a lot of people knew me for like the Bitcoin on-chain data.
Yeah.
Yeah. This is something that I think I used to be like extremely valuable and still is like somewhat valuable, but perhaps not as much, or at least like the certain, data points that we used to look at.
Yeah.
And I think like, the ETF, flows have obscured away some of the signal on chain, but, in fairness, there's like this guy named Check on Chain, who's like one of these big, on-chain analytics, like focused people. I think he has like a research firm or newsletter that he still works on. He used to work at Glassnode, but he's very, smartly like pointed out like ETF flows are still like a smaller pool of capital relative to the overall, Bitcoin network. But I do think they've obscured things away. But like outside of just ETFs, you have all these custodians now and, prime brokers and all these things. So it's not as simple as, you can track like whales and the profitability metrics get skewed and all these things that, you do your best to filter all those things out, but it's like incredibly difficult and like very nuanced. I'm not a data scientist, but that's kind of like what I learned as time passed. And so
With the holders. Yep. Oh, one sec, guys. Yeah, I can. I think we can just phase Will out. I think it's okay. Will, I think we'll just let you go. I don't know. One sec, guys. Just I can. I think we're gonna let you go here, and we'll see you this week at the conference. Are you gonna be at Permissionless then? Alrighty, man. All right. Well, thanks for coming. Sorry for the abrupt stop here. All right, buddy. All right, guys. Up next, we have Brian from Chorus One. I've been at a couple conferences with Brian, and looking forward to having him on. He's been pretty heavy in the investing space, doing a lot of things for the venture side, and also in the staking landscape. So we'll get him on. We had to cut Will shortly. He had just a brief drop on the audio and video side, but no worries. We'll get Brian up here in a sec, get him in the back end, and keep the show rolling. I think what Will was commenting on about the macro side of things was particularly interesting. Where, I mean, like we saw, we had these politicians come out and say, look, no war, no, we're going to cut spending, austerity, and then. I mean, within a couple months of the presidency, we are back to spending, and now I would anticipate that probably even scales more. So we're going to get back deeper into the crypto roots now with Brian, and welcome him up to the stage. So what's up, Brian?
Hey, Andy. Thanks so much for having me. Very impressed with your sharp, on point production here. So excited to be on.
Appreciate it. Still, we're still trying to, put it all together a little bit here and there, but it's good to have you. Where are you calling from?
I'm in London this week.
Cool, man. Cool. Are you headed to Cannes next week?
I am. Yeah,
Nice.
I will be there. You as well?
Yeah. It should be a good one. We have Permissionless this week here in New York, and then Cannes next. So it's going to be quite the run.
Yeah, absolutely.
Yeah, man.
Wow.
Well, yeah, I'd love to see you out there and just kind of chat there as well. And I wanted to bring you up today to just kind of hear about what you're most interested in recently from a personal perspective, from Chorus's perspective. We've been kind of studying some of your research around just proof of stake networks, all the work that you guys do with the validators, and just on the investing side as well. I actually saw Xavier spun out his new fund today as well, Fractus.
Yeah, absolutely. I mean, I think on the investing side, we do some balance sheet investment from Chorus One, but then I would say Fractus is definitely, I'm very involved in there as well. And that's where we focus a lot in terms of investment. So it's a very early stage, pre-seed, seed stage venture fund. Actually, majority, 6 I think of the 8 deals we've done have all been some sort of crypto AI related. So there's been quite a bit of an AI focus on that side.
What are some of those deals that you're excited about? Like, what are the problems that they're solving? Why is it investable? Just generally curious with this trend. It seems to be basically verifiability, some form of decentralized compute or inference, or effectively making new forms of LLMs possible, on chain through some sort of interaction or something of that sense.
I did a podcast with Haseeb from Dragonfly last week, and I asked him the question hey, if you were in a VC, what market in crypto would you focus on? And he said, well, having some kind of chat-based, natural language-based wallet. And I also think this is one of the most interesting areas. Actually, the very last investment we did with Fractus was exactly in that kind of vein. And I would say another related topic that I've been, thinking about quite a bit is the security aspect. So, security is just so hard. And, after the Bybit hack, I was really being hey, can I fully verify what I'm doing here? This thing I'm signing on Ledger, is it actually correspond to the thing on the screen? And it's almost impossible. So I do feel that if we actually want to have good security, to be able to say, hey, this is what I want to happen, then some AI can create a transaction. Now, of course, the security becomes very crucial here because you have to make sure the transaction actually matches the intent.
Right.
So you have to have some sort of layer there. But then afterwards, that can get executed. And I think that way we can, first of all, massively improve the user experience and the ability for people to interact with on-chain systems. And I think we can also massively upgrade security. And I think if you look at how something like ChatGPT is, completely transformed how, I barely use Google at this point, right? And I think many of people are like that. So I think I would expect the same kind of thing what's going to happen around wallets as well. And that, we'll mostly interact with our crypto assets via an LLM. So I do think that is really a big area that could be super interesting.
Yeah, what's funny is my current interpretation of chain abstraction is going to be effectively just operate on chain using some LLM, like a very lazy mindset. Like no, why do I need to click all the buttons and use the ledger? Why can't we just have this kind of more like assistant based usage of the technology? For
sure. Yeah, absolutely. I think chain abstraction, it has to really be abstracted away fully. Otherwise, it just adds more confusion to it.
Yeah. One of your recent posts was actually around this security aspect around self-custody, and you wrote that it's really hard to recommend self-custody to the vast majority of people. And this is a problem of the UX, but then it kind of like directly conflicts the ethos of the space of some of that be your own bank, that type of stuff. Do you think that some of these investments that you guys are doing, or this general like LLM natural language, presentation will allow a return to self-custody, or are these LLMs and such more oriented and optimized around like custodial wallets, exchanges, and being able to interact in that way?
I can see both ways, but I do think, I had some relatives, right, who ended up buying some Bitcoin, relatively early on. And then I would help set up a ledger and, try to teach them. And each time they require so much support. And, and all the time it's like, hey, I don't know, that's not working anymore. Or how do I claim these rewards? Or and they just realize that even with a serious effort, people who are not deeply in the crypto space, it's just a nightmare, and it's so hard. And now, of course, at the time, there wasn't really that much options. And at the time, I think we still had a lot from the Mt. Gox days and these kind of hacks. You were like, oh, you can't hold your keys on a centralized exchange. It's hey, not your keys, not your coins type thing. But, today, I was talking with the guy at BlackRock a while ago who works on the ETFs there. And for most people, okay, you can buy your Bitcoin in your normal brokerage account, and it's cold storage with Coinbase and, super liquid. And if you want to borrow against it, you can do it from your brokerage accounts. If you see all those things, you're like, that's actually superior, I think, for the vast majority of people to try to do your own wallet type stuff. But I think the only thing I can see changing that would be some kind of AI that really helps you do that. Now, where exactly are the coins or the keys stored?
Yeah,
maybe it doesn't even matter that much. I think in the end, I don't know if people are going to care. But yeah, so I think that is probably going to be one of the most interesting and powerful areas, and maybe also one of the areas where crypto really has a massive advantage, because if you're going to try to do some sort of chat AI based interaction in the traditional financial systems, since all of these systems are so closed off and walled, it's going to be much harder to do it than in crypto, where everything is open and interoperable and composable by default.
Yeah. That is when you look at the intersection of these two technologies, that is kind of what you see consistently people opting into using crypto rails for. I tend to agree. I'm not sure that's really going to matter. It's more of just either way, as long as it's optimized for the end user and for people who are, let's just say, much less crypto native than the rest of us. And I think that end result will also, that's a win, and then it'll trend towards the more secure solutions over time. Kind of on a whole different note here, you guys have been working quite a bit on the institutional front when it comes to staking. We don't yet have a ETH ETF, a staked ETH ETF. I think I saw something from Bloomberg, Solana, Avalanche, Cardano, Ripple, all these proof of stake networks, or most of those are coming onto the big stage, right? And I'm curious, when you're speaking to investors from 𝘗𝘗's perspective, how much interest are you seeing from them to actually participate in staking of these networks? And when we're talking about like these larger networks, a lot of it is to kind of, basically break even with their inflation and avoid dilution. But I'm curious, like, how much of that yield component are these institutional people interested in? And is that something that you're seeing at like the larger levels for, these types of clients?
Yeah, so you can look at this in different ways. First of all, if you zoom out a little bit, I mean, it's also maybe tied with my conversation I had with the person from BlackRock, right? Where he was like, he speaks with all of these people, buying ETFs, and the demand is really super overwhelmingly just Bitcoin right now. So I think the larger demand for ETH Sol is a little bit there. And then I think for the long tail, it's really almost non-existent right now. Of course, that hopefully is going to change. But I think that's kind of the situation right now. But then if you look at ETFs, if you look at any traditional market ETFs, cost is a huge factor, right? Like you generally have the largest ETFs or the cheapest ETFs. And now, of course, if you can earn, 5%, 7%, or some percentage, you can cut the cost to zero, you can pay an additional yield. So I think it's going to be very, very crucial for ETFs to pay, as high a yield and have as low cost as possible. Like today, you have staking ETFs in Europe, and they're still higher cost, a lot of them. But I think with competition, this is going to go away. The costs are going to go down dramatically, and then staking becomes super crucial. And I think what becomes especially crucial, and what's been one of the big challenges for the ETFs, is that, of course, ideally you want to stake as much as possible. Right? Ideally, you want to maybe stake 100% of it. But then the challenge is that the ETFs generally have to serve a sort of T+1 type redemption. So people want to withdraw from the ETF, they have to return the money the next day. And that doesn't really match up with the unstaking periods of these different networks. So I think that has been one of the hardest challenges, where people try to figure out, what are different solutions to manage this. I think with the Pectra upgrade, it probably becomes a bit easier, but still there's a lot of complexities around that. And I think the regulators are very much like, they worry very much about the edge case. Like, what if now, 60% of the customers want to redeem it like at once? Then how are you going to deal with that? Even if that's not a very realistic scenario, because, realistically, you could just be like, you should stake 90% of it or something. And, that should be fine pretty much always. But I think dealing with these kind of edge cases has definitely been one of the biggest challenges around the staking ETFs.
Yeah. It's funny. In Europe, they have staking ETFs, and before they have credit cards. What is this world? I'm just fucking around.
We do have credit cards in Europe too. But yeah, for sure. I mean, in some ways, obviously, US way ahead, in some ways behind. So you always have this kind of.
What is some of the latest research that the team has been doing into outside of AI crypto stuff? What are some of the more interesting kind of companies that you guys are looking at or researching, or just new ideas that that maybe a bit more contrarian now or less popular, but could end up being more more investable, more exciting for the larger community in the future, right? 'Cause I mean, that's what venture is, right? It's being early, it's being contrarian. I'm just curious, like, what you're seeing as contrarian, but right now, that others really seeing.
Yeah, good question. Honestly, I don't have a great answer right now. I mean, I think when it comes to our Course One research, it's not so investment focused for the most part. Like a lot of our research focus is around performance optimization and like, how can we do things around MEV and, and it's especially on Solana. This is a very, very interesting market where a lot of things are happening. It's very dynamic. We have done some investments around MEV as well, although those I think are, not super, they're a little esoteric sometimes. Right? You have to be kind of deep in the weeds.
Yeah.
But at the larger, larger space, I don't know, larger opportunities. I mean, an area personally I found interesting and kind of cool, and I've made some investments in personally, although not so much with Chorus One, has been the DeSci area. So I do think that's a cool and it's different, and I think it's also something that can inspire people and get them excited about. Because I think one of the things we've also really seen, and I've really come to learn in a painful way in many cases, is just that in the end you need to have people who really want to buy your token and who are excited about your token, and just some other kind of protocol that sits in somewhere, and if it got a lot of traction, maybe collect some fees, and maybe they get some value flow to the token. A lot of these things are just not interesting and they're not exciting. And then if you just value things based on the revenues it generates, that's very hard, and very few things can really justify a high valuation that way. So I think that's why it becomes especially important also to have a larger vision that's kind of inspiring, that people want to buy into and people want to be part of. And I think that is something I really feel just should be a major criterion and way to think about when you make investments.
One last one for you with regards to the proof of stake landscape and the staking landscape as a whole. John Adler put out an interesting proposal with regards to Celestia and this idea of proof of stake networks moving away from proof of stake actually towards this kind of more governance concept, saying that you can rely on LSTs and you don't need this kind of proof of stake model to build out a secure network and actually have that kind of Byzantine resistance. What's your thought on this proposal? Is this is this something that you think is worth pursuing? Is it kind of far-fetched? What's your take?
So I have to admit, I actually haven't seen that proposal or read it.
Okay.
But I would say the larger question is an interesting one, right? Because I think traditionally we thought of proof of stake as something like, hey, you put up this economic value and then it's slashable. And that kind of is what the security is, the economic security. And I actually think Solana was one of the first, and I think it was maybe Anatoly that, sort of pushed against this. And they were like, well, this economic security is kind of a meme. And, you do have a bunch of the largest proof of stake networks like Solana or Avalanche that actually don't have slashing.
Yeah.
And then I think it really becomes something where the token holders kind of choose, generally based on their reputation or some other factors, a bunch of actors that then run these nodes. But there's actually nothing really at risk, right? Nothing can be slashed. So you can kind of see from that perspective that, I think the whole, you have to put up some collateral to guarantee behavior is not, we've been a wormhole guardian forever. A wormhole, it's basically a multi-sig, right? You could basically have 19 guardians that, jointly manage all these keys, and you have to sign collectively. And, that can be very secure because you have all of these different entities and they each have their own reputation. So I do feel that economic security and this kind of economic game theoretic slashing type proof of stake thing isn't always necessary. And I do think we're going to see probably more experiments in that direction as well, and I think we have seen that with new networks as well, where you see more launches that are some kind of proof of authority, small initial validator set that's chosen by the team and that run these chains. And that can certainly work fine for a while. We'll see what the end state is. Obviously, you have on the other side more networks like Ethereum that try to really go the other extreme and have full economic security, lots of decentralization, lots of different validators. So I think it's great to see all these different experiments. But I do think we're going to see a lot more experimentation and different approaches to kind of the current model of proof of stake.
Interesting. Yeah, it's the slashing it's the slashing part that people get kind of wrapped up in their head about. One is it necessary? Two, if the networks, as you said, don't have slashing, then kind of it begs the question of why why do we have to put stake up then, right? Why not just have that capital be used in a different way? So you should check out the post. I think there's going to be more changes in this kind of proof of stake landscape. But once again, I think as you mentioned, the institutional investors want the yield. They're a little bit cautious about it. We'll see what the market structure bill could potentially do in the States for these kind of staking ETFs. And I hope to see an Ethereum one by the end of the year. I think it's possible. So
cool. Thank you so much, Andy.
Yeah, Brian, it's been a pleasure to have you on. I'll see you in France as well. And it's good to have you on.
Yeah, would love to catch up there. Thanks so much, and see you in Cannes.
Cheers, man. All right, guys, we've got the debate up next. We've got the clubs debate between Nick and Doug. First up, before we jump into that, we've got a larger task or a larger conversation at hand. Again, Texas and Bitcoin go hand in hand. So in this news, we have Texas launching a Bitcoin reserve. This is pretty insane. Again, just more and more of these announcements will keep happening, right? You're going to have countries adopting Bitcoin. You're going to have actual nation states that are like sovereign wealth funds adopting Bitcoin. You're going to have legislation around it. And so in this sense, what's happening here is it's the first U.S. state with a formal reserve. Governor Abbott signs this into law, authorizing BTC holdings. It's going to actually be managed by the state comptroller and advisory boards. And yeah, people will fund it publicly, taxes, private donations, and it's really just going to keep as a pro-Bitcoin state. So I think that this is something that we'll see more and more of. And yeah, that just wanted to bring this up because I just think that this type of legislation in the States was far-fetched a couple years ago, and now it's
yes,
I
do see that.
All right, guys, we have the debate up next. We've got Nick and Doug in the back waiting to come on. I'm looking forward to having them on and to see their perspective. So we got Doug is representing Fogo, Nick is representing Celestia. Well, Doug's ambient and Fogo, and the core conversation here today is going to be around the different approaches to building central limit order books and really just high throughput applications as a start. And so the goal for today is to understand the trade-offs of these two different mechanisms between effectively shared state L1s, general purpose L1s, aka shared state, general purpose rollups or L2s, application specific L1, so a chain like Hyperliquid, or a app specific chain like a rollup with a single sequencer. So excited to get this rolling out. We're gonna get them up here in a second and should be a good conversation. First debate on the Rollup TV. Excited to have it, excited to learn. Feel like I'm gonna be doing a lot of sitting back and relaxing on this one. So we'll see. We'll get them up here in a sec and get it started. Give us just a couple secs. My main goal here is to understand basically the best way to build something like a club on chain. And I think you can even expand this outside of like central limit order books, just any sort of high throughput application, and just kind of understand, why there's better infrastructural designs for these, and what that is really going to make up. So we're going to talk about liquidity, composability, MEV, and just generally how we're looking at this from that perspective. We're going to try to figure out why Doug is building on Fogo and what the infrastructural designs that they made in particular to accommodate clubs were. And how, and I do have a feeling this is going to end up being kind of like a single sequencer versus decentralized L1 type of conversation. But we shall see. And we're going to get them in and get this thing going. So just give us a second or two here to get them loaded up and we'll get ready to go. All right, guys, give us 1 second. We'll get them loaded up. All right, guys, give us just a couple of seconds. We'll get them in. We have Doug and Nick loading up in the background. And again, guys, just want to iterate that the goal of this is to understand the trade-offs in design between the different architectures for clubs, and really just for any kind of like high throughput application. That is going to be the main prerogative today. And again, kind of Doug will represent the high throughput L1 on a shared state, right? He's representing Fogo, and Nick will most likely rep the application specific rollup. But I think it's more of just L1s versus rollups in a sense today. So first debate on the TV, trying out new frame, new technical setup here. So give us a sec, guys. All right, guys, while we're waiting, I'm going to take a peek at the timeline, see what's going on here. Wow, it seems like, yep, 𝘭𝘅𝘅𝘐𝑚𝑚 app has been all over the timeline. I think they finally let people tweet about it. I don't know if you guys have seen it with the, that's actually probably going to be a good example for this conversation as well. But it's like this gambling app. Movement up 40% in the last 24 hours while everything else flattened down. What's going on? That I do not know. That I do not know. Trump's calling it quits on the war. All right, guys, give us just a quick sec here. Should be almost ready to go. Just sorting some stuff out in the back end. Appreciate it. Pushing the limits of the oh my God, can't believe we're seeing World War III before Monad mainnet from Naruto. All right, guys, we should be up and live in a second. Looking forward to this one. Got a good 30 minutes or so. All right, guys, give us just 1 or 2 more minutes and we'll be live with the club debate. Should get Doug up here in the back, Nick as well, and get fired up. Alrighty, guys. Welcome, Nick, Doug, to the Rollup TV for the first debate. I appreciate you guys working with us there in the background, and good to have you both. I think the goal of today is to understand the trade-offs between the kind of different ways and infrastructures to build high-performance, high-throughput applications. In this case, we have 𝘗𝘓s as the main use case. It applies to pretty much any and all of these different types of applications. So why don't we jump right in first with just some brief intros from you guys about
Sure. Pleasure to be back, Andy. Thanks for having me. Excited to talk about 𝘗𝘓s, specifically 𝘗𝘓s on blobs. So I'm Nick, work at Celestia Labs, and we're building a high throughput DA layer 1, to support all kinds of applications that need customization and high throughput. And we think that 𝘗𝘓s are actually one of the first application use cases that has really hit PMF, sort of showcased by Hyperliquid success. But we're still in the very early innings of like how this market will evolve and what the future of 𝘗𝘓s will look like on chain. And more broadly, we think that like every application is going to eventually hit these same sort of like dilemmas of like scaling and throughput, and also customizing their chain for the specific use case. So this is kind of like a microcosm of a much bigger conversation, I think. So I'm excited to have this with Doug, who is obviously a leading expert.
Well, thanks for having me, guys. Great to be here. Long time fan of the show, so glad to be on. So my name's Doug. I'm co-founder of 𝘭𝑔o, which is an upcoming chain that's an L1 SVM based, and basically the chain is kind of optimized for high throughput, low latency, and specifically focusing on kind of onboarding trading applications and kind of supporting kind of what's needed for kind of the level of trading that people are used to on TradFi or Sexus. In parallel, I also founder of Ambient Finance, which is also building on top of 𝘭𝑔o and specifically building a 𝘗𝘓 perp application now. So kind of sitting on both sides of the app and the chain side. But yeah, interesting area. Excited to talk with you guys about it.
Yeah, guys, for sure. Thanks for joining. Excited to kind of understand the trade-offs here in the perspectives and thought processes. And I think the general idea here is to understand between the different approaches for building these high throughput applications, specifically with in this case being 𝘗𝘓s, in other cases being other kind of non-financialized applications, consumer apps, etc. So, Doug, why don't we start from your perspective and just give a kind of opening statement with regards to why you think the design of 𝘭𝑔o, in this case, a L1 that has a 𝘗𝘓 on it, which with this kind of atomic composability and shared state, is the right way, and what trade-offs you guys inherently accept by doing it in that way, and then we'll give Nick the opportunity to do the same.
Yeah, so I think kind of the core problem that 𝘗𝘓s in general face, really any trading application faces, is like on a blockchain, right? When you have assets whose values are fluctuating rapidly, kind of blockchains are not out of the box built for that situation. And so right in traditional financial markets, kind of these high frequency systems are very centralized, and that kind of allows you to deal with like some nitty-gritty problems about how transactions are processed and the latency they're processed in and the order they're processed in, and there are kind of some important guarantees there that just don't work out of the box on blockchains or even distributed systems. So like, right, typically we call those MEV, some capacity or another. So with 𝘭𝑔o, what we've done is we first started with like, because Solana is a very successful ecosystem, but it does have like problems with this, and particularly 𝘗𝘓s have been difficult to get to work on Solana because of the block times. Even though they're fast, 400 milliseconds is still pretty slow in HFT world, and a lot can happen, and kind of the block producers can play funny games with how transactions are sorted. So I think we'd probably all in this room agree that to make CLOBs or similar, really any kind of trading application work where people can extract a lot of value, you kind of need to be more opinionated about the rules of the chain. So we try to our goal is to keep the chain as Solana compatible as possible from an execution environment, and I think that gives you a lot of nice composability with existing protocols. But we have made trade-offs in kind of the centralization versus performance space. So in particular, we do what's called multi-local consensus, where the validators are co-located at a data center. There's kind of fallback procedures for them to move to other data centers or even fall back to global consensus. But like in general, in the happy path, validators are co-located, and that just allows you to achieve, much lower latencies, in our case, 40 milliseconds or less. And then we also are opinionated about how transactions have to be sorted, how transactions have to be prioritized. And again, right, like on a general purpose blockchain, that kind of breaks. So a big one, and this is a big reason Hyperliquid has been successful, is for example, on a CLOB, it's important that market makers kind of can't get steamrolled on their quotes. So Hyperliquid, right, like prioritizes cancels on CLOBs. And that's just, obviously market makers are a lot more comfortable quoting liquidity at large size and good prices. So we've definitely made some trade-offs, and I think, like as we discussed, we'll probably agree on a lot more than we disagree with. But that's in general kind of our take at Fogo.
So okay, so there are some, maybe this debate isn't actually as far off as we thought, considering there's a validator co-location happening, which sounds very similar to, a single sequencer type of model. But Nick, from your perspective, when you're looking at this, like kind of CLOBs on blobs versus, whether it be a general purpose L1 or a application specific L1 like Hyperliquid, from your lens, whether it's a latency game, a specialization game, what makes you feel so strongly that CLOBs should be in a specific infrastructure stack, and kind of what is your view on that more generally?
Doug did a great job of setting the context, I think. And so there's a few, I think, North Stars probably in designing and building the optimal CLOB, right? And one is that you want to minimize latency as much as possible, because it's sort of like connects to Solana's original tagline of like consensus at the speed of light. Basically, you want the information to propagate and be updated as fast as possible, so that like the prices are as fresh, right? And price discovery can happen efficiently, and people don't lose money because they can't actually like update what their orders and things like that. So latency is a massive one, and I see the trade-off there as being kind of geographic distribution and decentralization, like a standard L1 like Solana or Ethereum, or being a validator set that is co-located like what Fogo is doing, or just at the very extreme end, a single centralized sequencer. And the important thing is that someone's full node needs to be able to co-locate with whoever the person is that's sequencing the current block, so that they can get a confirmation that your order has been placed and executed, which is also another thing that gets lost in a lot of the debates online. Is like, it's not just about inclusion of your transaction, but a guarantee that your order is not just included, but it is, you got to place your bid, right? Or you got to hit that order and your trade is completed. So that's one side of the spectrum. I actually tweeted sort of like a graph of this earlier today when I was like thinking about and preparing for this conversation. And then the other axis is application specific versus general purpose. And you have rollups that are general purpose, like Rise is one that's building a more general purpose chain, but that wants to have CLOBs as a primary use case. You have general purpose chains like Solana that want to do everything. But the point is, they're not necessarily baking in these application specific rules that you would if you're trying to support CLOBs as a use case, such as cancel order prioritizations. There's probably a lot of things that you can do with just custom sequencing rules. There's also a lot, I've talked to Tristan at Bullet about the need to make placing orders and updating orders free, right? So like, you shouldn't have to pay gas every time you want to place an order or cancel an order, et cetera. But you should be paying trading fees. That's normal. So you can redesign the economics of the chain as well to be more suitable for like a trading experience. And so I think that those are the two axes here. And I think you are right that I think Fogo and like, you know, Doug and I are actually somewhat aligned in the sense that I think application specific is the winner categorically. And I think that co-location and geographic centralization is also the winner in terms of latency. And then one interesting thing is like, there are a few other things that I'll open the debate up on beyond just those two axes where I feel like rollups do have an advantage. One is that rollups also gain an advantage of not having to rebuild all this sort of expensive, challenging consensus infrastructure and having to manage a validator set and all those things. So they can move faster and just focus on the product. And so I think that's a material advantage that may make a difference in terms of like who can ship faster and win in this race. I think it'll be like kind of an ongoing war. And then I'm also curious to maybe chat with Doug a little bit about like how much does the latency, is there a difference between the latency you can get with a single sequencer and a co-located set of validators, or is that like the exact same at the end of the day? Because that's something that I've been trying to reason about myself.
Yeah, that's a great question. I think the reality is that there probably is at least somewhat of an advantage for a single sequencer, and I think it's interesting. Like, what is it? What are you actually thinking? What do we actually mean by latency here? And so, right, like one thing a validator can behave like is a validator can behave like a single sequencer within the block that that it's producing, right? And it can single sequencer, right, is giving you kind of pre-confirmations, and there's nothing. I mean, I guess, right, like depends, but usually, right, there's nothing like fundamentally crypto economic about those confirmations. It's just kind of like the single sequencer will confirm your trades, and then you kind of expect that, you know, if they're an asshole and then they bust your trades before they commit to the base layer, you know, that's obviously going to hurt their reputation. It's bad for the chain, and they're just not incentivized to do that. So validator
you can create economic incentives. I guess you can, like you can have bonds. Yeah,
you can have bonds. Yeah, but I think. Yeah, I guess you can have bonds. You do have to. I don't know, actually, Nick. You probably know more about this, but like if you do bonds, right, you do have to produce like a state root, and I think like Mega ETH or some of the really low latency ones don't necessarily like. They kind of do something closer to shreds than blocks. I
was talking to Rise, and they did say, according to Sam, they actually do commit to this.
Oh, really?
So they have it. Yeah. So their confirmation is like an execution guarantee that like your trade is executed. Here's the updated state.
And then it would be flashable in case of that. Yeah. So that makes sense. So right, like you could do something similar with like a validator where a validator like gives you an execution guarantee and then commits some bond. And then it has you know, some incentive to do that. You know, the challenge is right, like doing anything in validator space is right, you have to wrangle a bunch of validators and get them to sign on versus one sequencer, and kind of to your point, right, like that is a reason L2s can move a little bit faster. But yeah, like in terms of block production and like actually like confirming the block and through the network, I think right, there is going to be some latency just intrinsic in that. Now we think like in a single data center that's actually not huge. That's probably on the order of maybe another 10 milliseconds overhead, which, you know, is not, it depends, right? Depends what markets there are, but like, you know, a lot of times the centralized exchanges, they will have kind of spikes in latency that are around there. So, you know, a lot of it depends. I think obviously like 12 seconds on Ethereum or even 400 milliseconds, that gives you a big opportunity for price discovery somewhere else. You know, past a certain point in microseconds, nanoseconds, it becomes more a game about positional. You know, HFTs want to be as fast as nanoseconds, not because stuff is necessarily happening that fast, but just because they want to be faster than the other guy. So a lot of it's also about kind of consistency, and that's where kind of co-location is interesting, because if everyone's co-located at the same place, we're all kind of on equal footing versus kind of a geographically decentralized network. It's really tough, right? Like it depends who's located where. So Yeah, I'd say on that point, yeah, there is some kind of a latency penalty for an L1, but I don't think it's really kind of, if you do co-location, it's not super material just because that kind of networking overhead isn't a ton.
So Doug, when you went to build Fogo, why did you not build it as a rollup?
Yeah, a couple reasons. One, actually rolling up SVM is fairly difficult. There is kind of this state root thing, and the reality is that we wanted really fast general purpose execution. We wanted that composability, and like SVM just had a big advantage over EVM. The second reason is we don't necessarily think kind of the security guarantees you get from an L2 are super relevant for like a very trading centric domain. So like, right, like traditionally, like the security guarantees you get from an L2 is when things are committed, right, you're secured by the L1, but in between those commitments, right, you're just secured at the L2. You're not inheriting L1 layer security, and right, censorship resistance, something similar, right? You have force inclusion and that stuff. So kind of the problem is when you're in kind of a very trading centric framework, the latencies that you care about where someone can kind of play games are not super relevant at like kind of the timeframes that like force inclusion and commitment to state root happen. So like, for example, an L2 can still do something like censor an Oracle update, right, to prevent itself from getting liquidated or make you get liquidated or selectively send Oracle updates. The L2 security model doesn't necessarily give you anything to protect against that. So right, it can't steal your funds, but it can definitely kind of play games, especially if you're levered and make you get liquidated. It can also do stuff like with a centralized sequencer, it can play games where it has certain participants or maybe its own market making desk. It's taking packets from someone that it's friendly with and kind of has a faster path in the network from those packets. And that's hard to observe at a single sequencer. Kind of the nice part about an L1 is you do have rotation between validators. And so everybody is kind of running the same software, can look at the network. So that's actually a huge reason Hyperliquid, I think, is, even though it's closed source and even though it's pretty permissioned, compared to Binance or something, nobody really knows. Is there like a certain path where things are faster on Binance, but at least the Hyperliquid program runs on separate machines, and people can kind of see that it's auditable there. So I think that's something to be said for an L1, or I guess even an L2 model where you're rotating the sequencer. Is there some auditability and trust that just comes from kind of moving the sequencer from across different parties?
Understood. Now, kind of on the contrary there, Nick, when you're looking at user experience for a single sequencer model of a CLOB, it's going to have extremely fast pre-confirmations, very, very, very short block times. When you're looking at a L1 that has to run consensus around a set of distributed nodes, there's going to be a slower UX. Now, again, our brains can only process, I think it's like 200 milliseconds or 250 milliseconds at a time. But with the co-located, set of validators like in Fogo's model, you kind of get away from that problem. The question that I'm trying to kind of tee up here is how much does a UX improvement from a faster pre-comp, faster block time on a single sequencer model, how much do you think that's going to impact people's preferences when it comes to using a CLOB, i.e. will that be a massive decision maker for those people as to like where they want to trade? Or is it something else that matters to you from your perspective as to why that's a better model?
Yeah, I think Doug's making really good points. And again, it kind of comes back to this trade-off of like censorship resistance / sort of like decentralization of who can sequence blocks versus latency. And I think it is probably likely that a single sequencer is probably the pinnacle of how fast you can be on latency. But then you do make other trade-offs, such as a centralized sequencer it's kind of trivial for it to censor things like he was mentioning, an Oracle update or what have you, right? So, or give preferential treatment. It's trivial because like but kind of what we're talking about is collusion. But the thing is, it's not necessarily the case that just because you have a certain size of validator set that they can't also collude. Although the more validators you have, the more difficult it is to basically play those games, essentially. So again, it's like a spectrum, and it's not necessarily black and white. And I think what it will come down to is like, what does the market and what do traders care about, and like how valuable are these different properties to them? I tend to think that, you know, at least if centralized exchanges are a guide, people don't seem to worry that like Binance is like biasing or like censoring things, etc. And if they were, then they would move their funds. So I feel like there is inherently a incentive alignment for the operators of these clubs with the users. So I think that makes it much less likely, like the ROI of doing an attack of censorship or favoritism is probably net negative at the end of the day. But again, you know, we'll see. What I think is most important is that rollups still preserve the really important quality, which is like they're non-custodial. So as long as you're posting to a robust DA layer and you have some kind of execution proofs, any of the funds that are on the rollup are safe. Like the sequencer, even if it's a single sequencer, can't, you know, steal your funds. And I think that's a very important difference between a centralized exchange and a decentralized exchange, like the clubs that we're trying to build. And so that's to me, that's like the really, really important one that you can't lose. The censorship part of a single sequencer may or may not be as much of a problem, and people might be willing to accept those things for the advantage of that incremental lower latency. But it's something that we're going to have to see play out in the market, I think.
Yeah, I'd say just a minor follow-up. Yeah, I think like explicit censorship is pretty easy to detect, and you would kind of, right, if someone was like just not pushing Oracle updates, it'd be pretty easy. My biggest concern would be, and you touched on this, but just kind of favoring certain traders over others, because that would be pretty difficult to check. If, you know, I was adding a couple milliseconds to your path and shaving off a couple milliseconds from my friend's path, that would be relatively hard to detect. And the reality is, like, centralized exchanges, I think at various points have been caught kind of with their hands in the piggy bank there. But yeah, I agree with you, Nick. This like you said, it's early innings in this, and ultimately we can speculate as much as we want, but the market will see. Nobody can tell you for sure.
Doug, one of the pushbacks for the kind of roll-up model, specifically the application-specific roll-up model, has been interoperability and just kind of these applications living in these kind of silos, right? Where you have to bridge and you have to deal with some headaches to get there. Obviously, when you build out something like Fogo that has other native applications and a very, kind of all-in-one feel to it, you avoid that. And that comes with its own set of trade-offs as we've been discussing. But Hyperliquid has now kind of came out, and it seems like completely smashed that idea of, well, these kind of siloed individual chains, they won't be able to get a ton of liquidity or a ton of users because it's a headache, it's a UX problem, et cetera. How do you reason about that kind of situation, knowing that Hyperliquid has done what it has in its own kind of silo? Why do you have to build a chain that has a kind of suite of applications instead of just focusing on one, being the best place for a club?
Yeah, that's a great question. So I think, right, maybe in terms of that, Hyperliquid is the most successful probably crypto application of the past 10 years, and in a vertical that is a huge demand and people will bridge over. I'm not sure if every single protocol people will bridge over. I don't know if people necessarily bridge over for the third lending protocol out there, or even necessarily some launch pad. So I think, right, like, to your point, if it's a fantastic application, people will bridge. If it's not, if it's either not a killer application, it's an application that's useful, that certainly helps being on the same block space as other applications. And I think the other point is that even the the perp dex itself, if you're assuming that's the killer thing, having general purpose block space attached to it is actually super valuable. So like with Hyperliquid, I think we kind of see Hypercore plus the Hyper EVM is like 1 + 1 is a lot more than 2 here, and people are kind of valuing both because they're with each other. One problem is block space is just so commoditized now that everyone's like, well, why is any other L1 valuable? And Hyper EVM is obviously very valuable because it's attached to this liquidity. And vice versa, being able to build applications on top of that liquidity, I think is a huge advantage. So I think we're just kind of early innings, but there's a lot of really interesting things being done on Hyper EVM itself. So it's kind of cool, right? Like it started as a application specific chain, and now it's kind of becoming general purpose, which I think to a certain degree bears out kind of the importance of kind of composability and general purpose block space.
Yeah, I'll jump in. I think composability is obviously the killer, one of the killer features of building on chain, right? That these applications can verify each other's state and compose, but I just don't think that atomic composability is the be all end all for every application, and I think it probably makes sense to have atomic composability with a CLOB for certain key DeFi use cases. Like I've heard of like some really interesting ways of tapping into the liquidity on a CLOB to like earn yield while your order is like sitting there, and things of that nature, which I think are very compelling and great ideas that should be built. But does your CLOB need to compose with, all these NFTs or like some random game or all the whole universe of other use cases that just kind of are irrelevant to a CLOB, or maybe there might be some tie-in, but there's no reason why it needs to be atomic composability. It can be asynchronous. Then I think for that reason, like when we're saying like attaching general purpose execution to, let's say, Hyperliquid, like I'm doubtful that that's going to turn into whether there's really benefits of that composability for that class of applications. And so I think I don't know. It's to be seen how, like what kind of applications are going to benefit from that. But I think there clearly will be. And I'll also just say that I mean, it's been a long time, but I think that the composability for rollups and chains is improving basically every few months. And we're close to real-time proving now for ZK EVMs. And I think that that's going to start to unlock the ability for asynchronous composability to compete meaningfully with atomic like synchronous composability. So excited to see how that plays out.
So that's fair. Yeah, that makes sense. I guess I should have said synchronous composability or atomic composability, to be fair. Definitely can compose between chains.
So Doug, on Fogo, do the applications that are sequenced with some sort of like co-located set of validators versus the ones that use global validators, are those inherently composable, or is it just like a backup?
Yeah, the entire chain is sequenced with co-located validators. So we produce, it's a general purpose SVM environment, including the CLOB itself is just lives in. It's just a standard Solana program. It's privileged in terms of sequencing, but in terms of invoking the program is same as any other Solana program. When I mentioned global consensus, that's really just a fallback situation. If, for example, the data center goes down, then Fogo can always fall back to global consensus, and everything would run there. But obviously that wouldn't be ideal, and we hope data centers don't go down. So yeah, everything's running same place. And I think like to maybe the point there is like it is somewhat a trade-off you make like. There and something Solana has seen is when you put everything on the same block space in the same chain, right? Congestion is definitely a challenge, right? When someone's spamming some NFT mint,
Exactly.
that hurts. That hurts the CLOB, and we've tried to be pretty thoughtful about making sure that block space is pre-allocated and stuff. But definitely judge us on our results instead of what we say.
I actually forgot to mention something that I want to add. I don't know if people saw this, but I think last week or maybe a week before that, the Flashbots team released this analysis of at least base block space, and they were just kind of showing how MEV is like just or just like these economic kinds of like trading based applications generate like a lot of spam basically, and that drives up it degrades the performance and the gas fees and the user experience for like every other app on that chain. And if you separate the trading from the other applications, you can mitigate that significantly. So the gas fees over here can stay relatively low and reasonable, and all the spam gets kind of isolated to this execution layer. And again, that's like always been the superpower of rollups, is like this parallelization of execution. And so I think that that's a really important advantage. And another reason why you wouldn't want, not only can an NFT mess up the trading, but the trading just as a baseline raises the fees for everything else. And so it makes sense to me to want to split those things out.
It's interesting. It's actually a bunch of sub penny. I realized this the other day, or learned this the other day. It's really, you spam a bunch of wallets just to get your meme coin at the top of Dex Screener, because that's what how many wallets.
Is that actually what's going on?
Yeah,
that's hilarious. Oh my God.
That raises a good point though with regards to specialization, Doug. I'm curious, like how important in your thought process has been these, different. We just got one more thing here. We're gonna get Doug right back up. I'm curious just from Doug's perspective here in a sec about, oh, he's back. Doug, when you're thinking about specialization for ambient or Fogo, like how important has this idea of, different like custom ordering rules, things that are in line with like application specific sequencing per se, how important is that for a club? And how are you guys going to be able to effectively like compete with one who has that enabled on their own application specific chain with these rules that are meant for a specific DeFi app like a club? What's your thoughts there, and like how will you try to be able to compete?
Yeah, that's a great question. So, I mean, the reality is like we're general purpose in terms of the execution environment, but we're actually pretty opinionated about sequencing. So we think, right, like the transactions can just look like Solana transactions, but in terms of the sequencing itself, Oracle updates are prioritized at the top of the block, and block space is reserved for them. And this is why Fogo works so closely with Pyth and the team there, is because having that low latency Oracle is super important, and similar like critical updates to the order book
it's like
are
baked
just
in, right?
It's baked in, yeah. So top of there's a certain amount of block space that's always pre-reserved for these applications, and they happen at the top of the block, and they look like Solana transactions, but to be honest, right, like, so we're an app chain in terms of sequencing and a general purpose chain in terms of execution. I think there are some interesting ideas about how you can do application specific sequencing within like a general purpose chain. And I know like, Max at Solana has kind of written about kind of multi-current composers and stuff. But, I think that stuff is still way deep in research territory. And, maybe down the line, we'll look at it for Fogo, but for someone who wants to get up soon, I just think that stuff's not ready for prime time.
There's also something about, just to touch on the multiple concurrent proposers or multiple concurrent leaders, I think they had to rebrand it because MCP got squatted by AI. But anyway, and MCL, what's interesting is like you can get faster inclusion guarantees because you can co-locate, like no matter where you are, it's likely that there's a leader that's close to you. And so like whenever I'm talking about latency trade-offs with Toli and other people in the Solana camp, that's what they're always referring to. It's like, oh, well, one of the leaders is going to linearize it in a shred, and now you have an inclusion guarantee. But the important thing is that that's very different than an execution guarantee. And you don't know, there could be someone else who also placed an order with another leader that gave them the confirmation, and you're both trying to take the same trade. And so you don't actually know if your trade went through until the global consensus, everything gets like globally ordered and reconciled. And so the interesting thing is like on the surface, it seems like MCL gives you this better latency property, but actually in terms of what I think traders actually want on a club, it's actually worse. because like a single leader could actually give you that like guarantee of like it's executed, not just included. So I don't know.
Yeah,
I think that's kind of an
I
interesting
actually
trade-off. I
completely.
wonder if
I'm glad.
MCP is going to lose. Go ahead, Doug. Sorry.
I'm saying I'm really glad you brought that up, and that was a big thing with like pre-confirmations on like the like people would always this sleight of hand like we have this there's inclusion latency, and it's almost worthless from a cloud perspective. Great, your order arrives, but is it filled? Is it not filled? Like, okay, something's gonna happen to it, but like what? I don't know. Like, okay, so,
yeah.
We can guarantee it will either miss or it will fill. All right, thanks. It's worth a lot.
We had a wrap here in about a minute or two. Just want to give like closing thoughts with regards to kind of understanding the trade-off perspective, and maybe just looking ahead as to where we think this entire space of clubs could go in the future, and kind of just like why you feel strongly about this specific application for crypto. And I mean, from my perspective, it's all about on-chain price discovery. It's all about kind of shifting the idea of building new assets and having those be discovered on exchanges with exorbitant fees, market maker agreements, all these different things, bringing price discovery on chain, aligning that with the ethos and doing it at scale. And so, yeah, guys, thanks for joining. I just want to give you a sec to close out here, Doug, and then Nick.
Yeah, I'd pretty much echo that. I think obviously this is kind of the final frontier of getting TradFi markets fully cryptoized. I'd also say, right, like the interesting thing about clubs are they're kind of the most competitive, gamified, kind of the most sharkish type players there are in any financial market. There's obviously very smart people who spend their life trying to figure out how to gain very tiny edges. So I think, right, if you can get blockchains working for this application and working really well, that's kind of conquers a lot of other problems, even outside clubs.
Yeah, this has been a fun debate. I tweeted like over a year ago, I think that trading has always been the killer use case of crypto, one of the first ones. But the problem is it's all happening on centralized venues. And so it's kind of, and FTX would never have happened if it was an on-chain, non-custodial DEX, right? So we need to win this use case. We need to bring at least crypto trading on chain, and hopefully in the future, like all of finance, all of trading on chain. And like clubs are the first, the applications like Hyperliquid are the first like hint of the fact that like we can actually do this. And I'm just extremely bullish that over the coming few years, like we're going to make this happen and continue to make leaps and bounds. I personally think that rollups have a very good chance of being the leading architecture here. And this is what Celestia has been building for since the beginning. People have been making fun of Celestia for wanting to have gigabyte blocks and huge amounts of throughput. But then you look at it with Hyperliquid, they're doing massive amounts of throughput. And again, their trading volumes are very small compared to centralized exchanges or even TradFi. So we can already see on the horizon the demand for extreme amount of block space. We're trying to build for that future, and that's just really exciting. And why we're all here, and I think that's just the beginning of broader crypto adoption from here. And this just happens to be the first use case that's breaking out. So clubs on blobs.
Thanks, Doug. I appreciate you guys coming out, tuning in, and thanks for everybody who's been here. First debate on the TV. Had a little bit of hiccups getting in, but we made it work. Thank you guys, and see you both soon.
Awesome. Thanks, Andy. Appreciate
you guys. Later. Informative. That was fun. Sometimes it's sometimes you want to get the people a bit more yelling and screaming at each other, but I think Doug's very deep in the weeds as far as building ambient and Fogo, and then kind of Nick takes a very diplomatic approach all the time as well. So guys, we got one last speaker here today. We got Sean joining us, Sean Lee. Prior to that, we're going to cover Hacking. Hacking got, unfortunately, they've been hacked in some capacity. I don't exactly know how it happened or what happened, but the token went down quite a bit. I think they actually just recently put out a post today saying that it was not an exploit, it was an infrastructural problem on the upgrade. So looking to understand a bit better as to what happened there from the team, but it's just been crazy to see a couple of these happen over the last 6 weeks, right? You had Layer, and then you had a couple others just kind of go down. So hopefully everybody stayed safe from this. Just wanted to kind of share this here, and again, just it's a quick reminder for OPSEC and just to understand that it is a bit of a minefield out there in the space. So yeah, guys, we're gonna get Sean Lee up here and get him ready to go. Alrighty. Last one of the day, guys. And we'll get going. With Sean, we're going to talk about what they're doing at Magic. Sean and Magic have been good friends with the Rollup for several months now. We're actually hosting our second event with the team and 𝘱𝘭𝘢 this Thursday in Manhattan, so that should be fun. And yeah, guys, we're going to talk about AI, what they've done with Newton. They've just announced the token launch from the Newton Foundation as well. So more to come there. We're going to talk about AutoFi, what they are doing with Kaido. And actually, Sean just put out a really interesting post on X about the prelude to Newton. It's a pretty insane story about how he founded Magic and kind of everything that happened. So I'm going to ask him about that. I actually read it through and through and thought it was pretty enlightening and pretty interesting. So yeah, guys, let's get him up here in a sec on the back end and we'll get started. Last one of the day. Got some meetings tonight in the city. There's a lot of people in the city now. So excited to just take those down one by one. Otherwise, we got what's the market doing? I think BTC is looking pretty good. Had a really rough weekend, but we don't zoom in too hard. We just hang out, zoom out, look at the long term, see what's going on. So, all right, guys, let's get Sean up here in the back. I think he's just getting set up on his end. And yeah, that I thought the debate for the clouds, it's funny. I thought that they were going to be more, batting heads, but it seems that the way that Fogo is set up in a way is that it's actually almost closer to a general purpose roll-up design with some hints of execution specific optionality than the debate had potentially been promoted as or seen as. So as soon as I heard about the co-location, about how kind of Doug was thinking about it, I was like, okay, we're actually probably far closer to where we're going to end up in terms of the design as a whole. Anyhow, I do think that some form of co-located validators or a single sequencer co-located based on a time frame throughout, effectively in Eastern time, you have a certain time frame, and when it's European hours, you have a certain time frame. When it's Asian hours, you have the actual validators co-located in that region, or the sequencer co-located in that region. I think that's interesting. I think that Doug has a good point about the interop thing, where yeah, of course, Hyperliquid got a ton of traction because everybody wanted to bridge there. It's like one of the most prominent, successful apps. That's not going to be the case for all the apps. That's not going to be the case for everybody building. So I think that was a good point. I think the latency point is an interesting one. Again, having the actual definition of latency. The question is will users really care if the latency is slightly different between a couple 100 milliseconds, 10 milliseconds? I think ultimately the answer is yes or no. They might, but the answer is more important is for the market makers, as Doug was saying. If you have some sort of preferential treatment with a single sequencer, then you get into a setup where your friend could get a better fill, just with 10 milliseconds, 20 milliseconds rather than somebody else. So I think that's more of the question than it is for the actual end user experience. And I think that these clubs are optimizing, and these teams that are building are optimizing a lot more for those types of experiences rather than or those types of traders and users rather than just the average kind of trader. So guys, I think we're gonna get Sean up here from Magic. I think he's nearly set up. We got quite a bit to go over. As we said, these guys are pioneering along the crypto AI space. So looking forward to chatting with Sean, getting him up here in the back end, and having the last call of the day. So let's get him in and let's get started. Sean, what's up, man?
Hey,
good to see you.
hey, Andy. Good to see you too.
Where you calling from? It looks like you're in a hotel.
I am in New York now. I just flew back from South Korea.
Oh wow. How was the trip?
It was wild. It feels like
It's a cool
month.
place over there, right?
I love the food and the people there. Yeah.
Yeah, I remember I went to a Korean barbecue there and I was like, wow, this is like the most authentic Korean barbecue possible. So
The best.
yeah, man, it's been a busy couple of weeks for you. Travel, all of that, obviously token announced, etc. You put out a post recently about the prelude to Newton, and when we did that previous pod, we discussed and talked about your exit to Docker and just kind of the things that you did prior to Newton. But you know, through this journey, you know, you've been on this ride for now 6 or 7 years, and you've been hinting at something big coming up with regards to Newton. I'm curious, like, as you're writing this article, what is that future that you envision with Newton, and you know, kind of how does AI fit into that picture?
Yeah. I was I was one day feeling pretty emotional about the journey. It was like over 7 years, and felt like really want to write it out. And yeah, Prelude to Newton, it's exactly that, to show that it's the beginning of something much larger. And I always like to compare to the beginning of like Ethereum. You know, when I first got into the space, when I first got to know smart contracts beyond just cryptocurrencies, you know, as a primitive for programmable money, right? That can be programmed and composed into different kind of applications. But you know, as we enter an AI native era, we actually need a new primitive because AI cannot be fully put on chain, right? So you know, these will be agents that can act on your behalf, like intelligently, but bound by your intent, and their actions are provably correct. So I'm thinking like bridging off-chain automation via AI agents on-chain, similar to how like Chainlink bridge off-chain data on-chain, right? So this sets us up for the foundation for self-driving capital, right? As a user, you can set goals, buy things, rebalance, earn yields, and have your agents execute securely, where AI brings in the intelligence, but Newton brings the trust, right? So there's no like blind trust, no middleman, and fully enabling AI to act on your behalf within the guardrails. What people have been experiencing with Newton is just the tip of the iceberg.
Yeah,
with
I
the
saw your
DCA
tweet.
agent.
People were like, "Oh, it's just DCA agent." You're like, "No."
No, it's a big deal, right? It's an end-to-end verifiable agent, from logging in easily, creating that smart wallet, to talking to the smart session,
Yeah.
to hooking up the permissions, to executing and then verifying. So it was like there's so much underneath. So I try to help people see it and like look into the light paper more. But as Newton continue to grow, we're obviously building more agent capabilities.
Yeah.
But also same time, this automation marketplace, so that third-party developers other than Magic can plug in their own agents as well, which opens up just an infinite amount of capabilities in the future.
So why do you think this is the right time to build Newton then, in this lens of this crypto AI intersection? Why is now the time?
Yeah, so we've spent the last 7 years on the front lines for like onboarding and trust. You know, we work with Fortune 500 companies, supported large scale apps like Polymarket, especially through the election night. You know, hundreds of thousands of devs, millions of developers. So yeah, this experience really sharpened our understanding of like real barriers, right? Not just usability, but also trust, transparency, and security. And I feel like this is for the past 7 years, this is the first time where I feel like everything is aligning, right? On the regulatory front, we're seeing real progress through the Genius Act, shifting towards better, clear regulation for stablecoins. On the technical side, we're seeing primitives that were theoretical starting to be more practical. Now we have more capable and democratized, or even like open source LLMs, confidential computing like TEEs, smart accounts with 7702, chain abstraction, zero knowledge proofs, all of this technology that constitutes this verifiable automation experience is now ready to be used. So I believe, the foundation is set, and the trust stack is here. And then all the use cases that we have dreamed of is actually ready to go, right? So we just have to kind of put these technology together and ship it. So this is a sort of perfect moment.
Yeah, man. I was actually speaking with Brian, who runs Chorus One's, their staking stuff and their validator stuff. He's been the founder there for a while, and we were speaking about their latest investments in crypto and AI. And the biggest thing that he mentioned was this: like when you type into the language, like a natural language model, what you want them to do. He was expressing that there was this need for one, security, to have some sort of like privacy, as well as understanding as to like what's happening after this, after a command or prompt was given. And then the other thing was like this verifiability aspect, right? Of like, how can you know and trust that you're going to give this command to some sort of agent, and it's going to securely and trustworthy go and act on your behalf in the way that you want it to do. And so I just think like, this problem is just going to continuously, like, it's something that like some of the smartest investors in the space are concerned with and are thinking about.
Because a lot of the prompt agent security is through prompts, right? There actually should be primitives for that.
Yeah. So, okay, so you actually put out a poll, I think a little bit ago, about DeFi AI or Def AI or AutoFi. And it seems that you guys have now at Magic coined this term AutoFi. So it's your vision for this autonomous finance, which I think is it resonates more than DFAI. It's even hard to say it, right? Could you expand on this idea? Like, for me, I hear this and I think about like this, some sort of automated assistant almost, right? Like, that's how I think about AI, right? I think about like from a lazy man's perspective. Okay, I want things things to be handled for me in an automated fashion. Maybe you can just walk us through what your AutoFi vision is and kind of what that means.
Yeah, so the reason I like AutoFi more than Def AI is that it not only captures crypto and Web3, but also Web 2. And Def AI is like very Web 3 term, right? So I want this to be bigger because autonomous finance is sort of the fintech holy grail, right? Not just for crypto, but everything. And actually, AutoFi is only possible, right, at the intersection of crypto and AI. For the first time, we can truly enable autonomous capital, right, with programmable money that can move itself intelligently, governed by programmable rules and verifiable AI agents. So it's not just about automation, but trust as well, right? Whereas this just wasn't possible in like traditional system, where you have to trust like middlemen and like institutions that's sort of in the middle. Whereas the adoption of AutoFi, I think, is also going to be further accelerated with like stablecoin adoption, which gives us price stable building blocks for easy entry, right, from the user's perspective. But also tokenized real world assets is going to be able to expand beyond just crypto asset class that can be automated, which will open so much more use cases than just like crypto assets, right? So this lets us do verifiable automation across asset classes, with the type of precision that comes with Web3 technology. So imagine you can do like rebalancing of your portfolio and finding yields, not only in crypto assets, but also with our RWA in other asset classes as well.
Yeah, man. I mean, I think that trend is only going to accelerate from the types of assets on chain. I mean, it's clearly already happening, and I think that I also said earlier in a conversation that I think like my current interpretation of like chain abstraction is actually just interacting with a natural language model from the user perspective and going from there and working in that lens. It's actually no longer like this like shared like chain. No. It's just like I want to interact on chain by going and using a LLM model, typing in a command or a wish per se, and then having that be executed.
Yeah, for sure.
Yeah. All right. So you've referred to your community as co-architects of what comes next, which is quite a line. How will user contributions, especially in this like decentralized compute or inference or even modeling, training data, et cetera, how will users be able to contribute and reshape the marketplace of intelligent automation?
Yeah, now that we're helping build Newton protocol, right? That is, in a way, build a protocol. I want to take the mentality that the community are also owners, right? And so co-architect could mean a lot of things, right? Every bit of feedback helps shape the product. I think since we've been building in public with Newton, we're just getting so much valuable feedback out there in the public. And then when we deliver something, the community really feel like they're part owner in this, and they're influencing change as well. So I really like that aspect of community building. It's not just about like yapping or whatever, right? But it's also about like ownership in what's to come and be part of the movement. So I want to continue to build in public and actively engage with the community. And then as we start to roll out the marketplace, we are already getting a lot of feedback on great use cases and like agents that we can build, what kind of assets we should add. So we've been taking notes and like prioritizing internally. So I think it's gonna get even more fun with the community as we roll out these dev tools and developers can get started as well.
Yeah, I think that's one of the more important aspects of building a protocol nowadays. Like with the abundance of tokens, of projects, of ideas, like there is going to be a large emphasis on differentiating via community, like having a large, real, sustainable idea that, because people want to believe in something and like feel like they're a part of something. That's like the big idea behind community, right? And so I think if you can like create this intangible feeling or group, then that goes much further in building like long-term ravenous supporters than just kind of people that are in it for the money, or even people that are just in it because it's cool technology. A lot of the best technology companies in this space also struggle with building this kind of like movement around why this technology exists.
Right. And the sort of experience that we're building actually allows this, right? Like imagine a regular wallet experience. When you add what the community wants, the UI will explode, right? There's more complexity, but in like an agentic user experience, all of that is just one prompt, right? So this way we can give people what they want at a super wide range of diversity. So it feels like the community and us are like baking this cake together.
So one question for you about this kind of trust idea and kind of how you're seeing this evolve. When I first started using LLMs, I was like pretty like reserved per se, and like what I was willing to share with Claude or ChatGPT or Gemini. But I feel like as over the last like 3 to 6 months, as I've started to use them much more, I've been more willing to like provide PDFs or files or this or that or information, written text, voice. Like my level of like of usage has grown more and more like tied to like my identity per se and like who I am. And there's like a lot of like data going into that, but it's still kind of like problematic from the perspective of like there's just a lot of reasons as to why. From your perspective, that's not even managing finances though. That's just like managing information and like being able to have insight into email responses or text responses or outlines, PDFs, formats, pitch decks, etc. When it comes to finances, it's a different story. I'm curious how soon you think mainstream people will trust AI to manage their finances, all the way from wanting to DCA a token to selling to what type of assets to transfer into. What's that going to look like, and how far off are we from that?
I think that's why Newton wants to trailblaze this movement, right? There needs to be like serious effort behind this, and it's already becoming a predominant narrative in Web2 around like agentic commerce. And I think that is something that people are willing to experiment first.
Yes.
Whereas crypto, it's more ahead, right, than Web2, where we're more experimental, like more things that we're willing to try. So it's like kind of like a chaos monkey for like financial applications, right? So I think that's really great. It's like this fertile ground for innovation. But just at this pace, we're seeing probably 1 to 2 years, right? It's my guess. I'm usually pretty optimistic. I don't know, but definitely on the Newton side, one thing that we have identified as a blocker is the trust and security, right, around this, which is why we're very focused on solving this problem with the Newton protocol. And I believe to make AI truly useful in finance, you actually need to give it a level of autonomy, right? But it needs to be like carefully scoped, because if you give like too little freedom, they're ineffective. But too much, like hallucination errors, and it causes damage, right? So, and even if you look at like Web2 today, many of the automation still require human in the middle, right? It's not fully autonomous. And this will be really important for financial use case as well. So that's where the sort of zero knowledge permission that's on-chain is really going to be revolutionary here, right? So it lets users define the boundaries for the agents. It goes from things that's as simple as spending limits, approved token or protocols, to conditional triggers like volatility, thresholds, or price movements. So I think that part is really important. And I think in some ways it may be easier to define in crypto than like Web2, because Web2 API is like everywhere, right? So and not very consistent, whereas EVM has like very consistent interface. So you could actually do that in Web3, and I believe this is one of the key hurdles to that mainstream adoption.
Yeah, I think that in the mainstream, agents have now become much more of a common term, and like you see Salesforce's commercials on TV, and that they're pushing agents hard. I think that's now something that people have wrapped their head around, and so now it does feel like the next step is going to be utilizing them across their financial life, and just kind of what that could entail. Last one for you. Outside of that specific use case, what type of agentic commerce do you think will be the most ripe for disruption of current incumbents or use cases, companies over the next like 5 to 10 years? Like where do you see the most AI influence in business and in commerce?
Yeah, I think agentic commerce is an inevitability. And one example I like to give is, think about how you shop today, right? In Web2, is maybe you go on Google, some other storefronts online, you search something, and then you go through the catalog, and then you go through the conversion flows. Maybe you convert, maybe you don't, right? But in like an agentic commerce future, that friction from user intent to final purchase is just going to be an instant, right? So this is going to be like massive, right, for conversion, for single items, but also with automation. You can imagine like doing this for bulk purchases. Like recently, I set up a PC. I want all these equipments, components. I could just order all of them like that, right, in one go. Or purchasing with some kind of coordination, let's say with an executive assistant, like booking a weekend trip, right? And you can pay using stable coins.
Yep.
So I think, yeah, like we may start to see some of these happen, or even like automated like subscriptions management. If you don't really use it, it helps you save money. It would be, I would definitely use that.
Sean, I hope you guys have a great week. I know it's going to be a busy one with the Newt token and with permissionless and everything in between. Appreciate you joining. Looking forward to seeing you maybe at the dinner or at the happy hour. Well, of course at the happy hour, maybe at the dinner. And yeah, man, I appreciate you. Thanks for coming on.
Likewise. Thanks for the invite, and great to be here.
See you soon, buddy.
See you soon. Bye.
Alrighty, guys. That wraps us up for the day. Looking forward to seeing what the Newton token does on launch this week. They've been working hard for like what 6-7 years, embedded wallets into now this kind of crypto AI intersection, and have one of the more passionate and stronger communities that I've seen in the space in some time. That was a really fun stream. Again, I'm looking forward to having Rob back on. There's some moments there in between guests and topics where I'm just, it'd be nice to chat with Rob and just get some thoughts, get his feedback. I think he'll be back as of this week. Like I said, at Permissionless. We will be live Wednesday and Thursday this week at Permissionless. Excited to be there today. Keep iterating on what we have here. As always, guys, thanks for being a part of the Rollup. And yeah, we'll see you guys on Wednesday live from Brooklyn. Thanks, guys. Peace.